Hey folks, welcome back to this edition of Ben's Bits. Last week we continued on the topic of the recent extension of the eviction moratorium and how investors who've owned multiple rentals over a long period of time are starting to offload their rentals, especially during the hot market that we're seeing because of low inventory. And for those of you who have been following the chatter about this topic, you know it can be a bit of a contentious issue, we'll say, because the average statistics out there are that there are about 6.5 million renters behind on their payments. And depending on those of you who have been listening for a while, the total amount of back rent owed is over $20 billion. And landlords are having to eat that every month, every passing month as we go on. And to that point, landlords who financed those investments are still having to pay their mortgages without any income coming in from the renters. However, it's not just those who financed investment properties that are feeling it, because even those investors who own their properties outright still have expenses like taxes, insurance, any maintenance issues that have popped up over the last year or so. And listen, without sounding callous, there are some renters who could pay, but they know they can't be evicted and they know how to play the game. So this is why we've been so vocal about renters and rentals and the posturing of gurus saying that they're the ticket to wealth. And again, I know this sounds counter to my previous statement, but rentals are not in the wealth building category. They're in the wealth preservation category. And even if we were to eliminate the past year and a half and the effects on the market, if you look at the totality of that segment in the market, and folks, we were saying this well before the pandemic was even in the picture. That's why we mentioned in the last week's bit that investors who already owned rentals or investors who've been in the market for a while were in a holding pattern, because there were signs that something was on the horizon. And it was never investors driving the rental acquisition market. It was new investors that were driving that market. Now those same investors are in severe jeopardy of losing their investments. And it's, quite frankly, heartbreaking, because they didn't do anything wrong per se. They were just a product of unforeseen circumstances and market mistiming. And listen, we'll be keeping a very close eye on things as they develop, and we'll disseminate that info to you in an undiluted, for better or worse. But as we wait for those new developments to occur and become more clear as to what options may arise, so that you could adjust if necessary. But for now, you should really use this time to reevaluate the strength of your portfolio and see what it looks like for your investment needs. For those of you who are familiar with Aesop's fable of the ant and the grasshopper, there's no story more fitting than it to show that now is the time to be extremely prudent and to be tactical about the preparations for what you need for the future. So you're positioned to not only survive, but to flourish, because we'll get through this. And when we get to the other side, we'll be better equipped to proceed. So that's it for this edition of Ben's Bits. And as always, thanks for watching, and we'll see you next time.